Hello, everybody. This is Ray Sammy from Jennifer Schaus & Associates. Welcome to the 2018 edition of Webinar Wednesdays, brought to you live from Washington, D.C. and hosted by Jennifer Schaus & Associates. Our topics cover all things related to U.S. federal government contracts. Thanks for joining us today. Our panelists are industry experts and include consultants, attorneys, accountants, and other professionals who work in the federal contracting sector. Our webinars are complimentary and are held every Wednesday at 12 p.m. Eastern. They are all recorded and can be viewed on our YouTube channel or directly on our website under the webinar tab. In the interest of time, we will not take questions, so please send your questions directly to the speaker, whose information is available on the last slide. All right, a little bit about us. We're a Washington, D.C. based consulting firm serving both product and service companies worldwide. Our services range from market analysis reports to contract vehicles and contract administration. We can help you with JC schedules, proposal rating, 8A certification, and more. We host events throughout the year, including training classes. So please visit our website or sign up for our complimentary newsletter in order to stay current. Please note our upcoming Government Contractors Spring Soiree networking event, which is hosted on March 19th. We bring together 100 to 200 government contractors and federal agencies, and please find more details on our website under the Events tab. Today, we are fortunate enough to be joined by Meg McKeon of ProAct, LLC. Meg will be discussing creating profitable pricing for government contracts. You can see some of Meg's background on this page. Thanks for joining us today, Meg. Let's dig into creating profitable pricing for government contracts.
Thank you, everybody, and welcome to my presentation. All right, today I'm going to be talking about profit in government contracting for contractors. So the best way to approach this is to look at each type of RFP or RFQ that the government usually uses and look at the profit considerations in each of those. So types of proposals that the government requests are competitive, commercial, and cost or pricing data. Next, please. Profit considerations that should be considered overall and then for each of the three types. So profit is something that should always be considered separate from administrative cost. Most companies or many companies only consider the actual cost it takes to make a profit or service, a product or service, and don't separate the administrative cost from the profit. So this is a very common commercial model that folks will just basically look at, okay, this is the amount of labor I'll need, here's some of the materials, and then all the rest of it is considered in profit. So the government is a great customer because they will pay for administrative costs. And this is a little different from a commercial model. And so whether you're doing commercial, competitive, or cost pricing, I suggest that all companies basically segregate or separate their administrative costs from their profit. So they're really seeing what the return on investment is on any kind of product or sale or service sale. Competitive pricing includes profit, and the government will not see that, see the actual profit margin. But again, you may not be getting a good profit margin at all if you're not really aware of what your administrative costs are. So if you haven't noticed by now, there's a major theme running through this, which is separate your cost from your actual profit. And when you get into certain kinds of quotes or proposals, the cost proposal, you have to do that. And over a certain cost limit, you have to show your government customers those costs that are related to the price of your proposal. So commercial pricing is based on what the market will pay. So it may still include administrative cost. Again, you're going to roll all that up in a pricing model, but it's best to make sure you really know exactly what your profit margin is that you are applying. And the final thing is the government will not pay over 15% profit in a cost proposal. Now, what this means is any type of proposal you provide, depending on circumstances, has the capacity to become a cost proposal if it's over $750K. Therefore, this is what you should be considering for your cost profit breakdown. is 15% is the highest that the government will pay, and there is guidelines for the government, called weighted guidelines, that determine what a reasonable profit amount is. All right, let's go to the next slide. So competitive, I'm going to just go through some of the elements of these different types of RFQs or RFPs that you might get. Competitive requests for proposals are the most commonly requested, and there's a lot of language in the Federal Acquisition Regulations regarding competition. From the beginning, FAR 1 talks about competition is preferable to the government. It's actually, in a lot of ways, the easiest way to buy a product. And there's several things that you wouldn't consider, such as GSA schedules, are in effect once you've provided your price. That's how they're used by the government. They're basically going to use competition to determine what is going to be the most reasonable price they can get something for. So there's several other types of competitive efforts, and I mentioned FAR Part 6. I always suggest that contractors get very familiar with the FAR, especially FAR 1 through 15, because those FAR parts really go through what you need to know as a contractor to do business with the government. And yes, it is government speak, and it's somewhat difficult to get through. So know your market to engage in competitive proposals. Go out and search for prices on your products. Just know what basically people are paying for what your products are. Do research on the marketplace and make sure all your costs are covered first. Now, I'm going to introduce a method in the cost section of this that basically allows you to segregate cost and really know what your profit is. Don't go below your cost. It's not worth it. No product or service is worth it if you're basically having to take a loss. If you do that to get the work, and in the commercial market we call those leaders, just know what you're charging and other things. And the more government work you do, the more you'll realize, because of the strenuous requirements the government has, that you have to be careful when you're lowering a price on one part, that you may not be able to make it up with a lot of government contracts and other parts or products or services. So if you've done something to lower your price so that you can get the bid, just know that the next time the government's probably going to want you to go lower and lower. It becomes this big game of how low can you go. Again, it has to be what's going to be best for your business. Next slide. All right, so a few other things to consider for competitive quotes. They only want the pricing, and I'm saying that because in the efforts that I do, and I work basically creating proposals for folks, analyzing their systems, doing everything I did as a DCAA auditor, but I also analyze for larger contracts their subcontracts cost or pricing, or their commercial or competitive pricing. So when I say pricing, I'm distinguishing that from your cost. That means pricing is all your cost and profit rolled up into one price. This is a little different from the commercial market where we only talk price. There is a given competitive pricing based on segregated costs, meaning the government expects that you have an adequate system, and especially an adequate accounting system. They're expecting that you are following all the requirements for FAR, and basically segregation of cost is covered in FAR Point 31 or FAR Part 31. So no matter what your pricing is, at some point you may have to show them what the breakdown of that is, and they want to see that you are segregating your cost from your profit and also your direct and indirect costs. We'll go into that a little bit later. In competition, what is often the case, especially when there is competition at the prime level and there are subcontractors or suppliers that have worked for the prime for quite a while, it's often the case that whoever has that contract, whoever is supplying those products or services, will then be awarded the competition again, and that is because of these transition costs. So there is always a cost to change or switch suppliers in the market. This happens with government agencies as well. So be aware that you're competing against somebody who already has that work, and in order to get that work from them, your price has to be low enough to consider that whatever transition cost the government or the prime contractor have to do will be covered in that. We see this all the time, especially as analysts, where we get bids from competitors, and they're only quoting a few parts. It's very likely that those quotes are thrown out because it's just not an equitable competition. You might have 36 products or parts on a competitive bid, and if you bid maybe 4 or 5 because that's all you're capable of, then it's not necessarily a reasonable thing for your government or prime to consider your pricing because you're not really bidding everything that they need. All right, next slide. Commercial pricing. So this is a very big area of almost controversy in the government right now. Commercial pricing used to be really simple. Government would want something, they'd like to buy it commercially. There's a huge pool to buy a lot of things for the government commercially. However, there's a whole lot of effort in proving what is commercial. So I mentioned in 2017 NDAA guidance for commercial parts. I would suggest if you are really interested in this and you are bidding commercially that you basically Google that and try to find the NDAA and read what it's talking about. So commercial pricing, basically there's a lot of hesitancy to approve something as commercial. And when that's approved, it's basically known as a commercial item determination. And how they do that is they basically use the definitions in FAR 2 to determine if your product or service fits within the commercial definitions. So I highly suggest you look up FAR 2 and look up the commercial definitions, because if you are going to propose something commercially, you will have to fit those definitions. And there's they have it numbered in different ways, but there's at least 4 different types of definitions. There's a regular, what we call off the shelf. That's what anybody's going to pay for it. And then there's another called of a type. That's a lot harder to get determined as a commercial item. So there's a whole lot around commerciality, but it can be a very good way for contractors to bid once you have gotten your process together to prove this is a commercial item, because again, it's whatever you have sold it to in different companies. So you have to be able to show through invoices or POs that you actually sold that product for the same price that you're proposing it for the government. And they want to see the proof of who it is. You can black out who you actually sold it to, but you do need to prove that that was sold at that price. Now that gives you a lot of leeway in terms of profitability. As long as you can prove that you sold it, and I would suggest that you have to have proof of at least 3 sales or something similar to the quantity that the government is requesting. And that's where it gets difficult. This is a difficult process to go through. They will prove it's commercial oftentimes by looking at drawings of the part or product, and it's an engineer determination. You as the supplier are submitting what we call a commercial item assertion, and there's quite a bit that goes into that. You have to answer several questions based on the definition of commerciality, and then be determined commercial either by a prime contractor and their analyst team or by a government agency. Currently to date, There are several agencies that basically deny commerciality of several parts. Very interesting time period on this. And part of the 2017 NDAA is basically saying to government agencies, if there has been a determination made prior, then we expect you to stand on that determination. So it's a very interesting time period for commercial items, but I highly suggest that you consider trying to do commerciality. Just be very familiar with what the new regulations are and how to basically assert commerciality for a government RFQ or RFP. All right, next. Okay, cost or pricing data proposals. So these proposals are actually considered quote unquote TINA compliant, and TINA stands for Truth in Negotiations Act. TINA is currently at $750K. So that's basically $750,000 proposals have to fall under the TINA requirements. And what that means is you have to provide proof of what that product or service actually quote unquote cost, or what your price is based on. And this is where you get into actually having to prove that your systems are adequate, meaning your accounting system actually segregates your direct cost from your indirect cost. So I have a few examples here of what it means to have direct cost. Direct costs are usually one of 4 or 5 types. There's labor, material, subcontract, equipment, which is very common in construction efforts, and then we call the other direct cost. Now that doesn't mean these are the only ones. A direct cost is whatever is in that RFQ or that RFP. It will be spelled out in your request for proposal. And so a lot of proposals may have costs that would be considered most of the time administrative or indirect. Websites, for example, they want you to basically create and maintain a website. That's normally considered your company's website as an administration cost. But in this case, you're creating a website for the government, and so all of those costs associated would be considered direct cost. So the government pays for a fair share of administrative cost. Administrative costs are those indirect. It's basically all the cost of your company that are not considered direct cost. And when I mean direct cost, I don't mean just the cost to that one contract. I mean all of your labor that's going to any government or commercial contract. All material going to government or commercial contracts or efforts. So please, if you have any questions about this, send me an email. I'd love to go into more detail with you. So direct cost and indirect cost must be segregated to be considered in cost proposals. All right, next slide. This is also true if the government is requesting you to provide an adequate accounting system. That's a type of audit they do, and what they're looking for are 2 main things. They want to see segregation of cost and adequate timekeeping, that basically people are filling out time cards correctly with unique job descriptions for each customer they work with. All right, so here's an example, and the rest of the slides are basically just going to be examples of how you can show your direct cost and your indirect cost to the government. So this is basically what we call a cost-by-cost element summary. You'll see the labor, and then you see the labor overhead. Labor overhead is all those administrative costs that help you to support the labor working on a particular customer job. That can include supervisory labor. It often includes all of the fringe benefits for the labor working on your customer jobs, which means payroll taxes, your paid time off, health benefits, etc. It can include repair and maintenance if you're basically a factory and you're creating products. It could be repair and maintenance. It could be freight. There's all kinds of cost. And there's a whole aspect of how you determine what pool your administrative costs fall into. So here you see the overhead pool, and the overhead rate is 150%. That is then directly applied to the direct labor. Then you see here material and services. Those are direct costs to the customer. Material overhead is the support of the material services. These are usually the people that you have purchasing your material and receiving your material. So material overhead is another pool, and its rate is usually less. General and administrative cost or rates are basically applied to your total cost. So those are all the costs that include sales and marketing, human resources, accounting, executives, any independent IR&D, bid and proposal cost, web cost, all kinds of things are included in that G&A rate. Now you see the profit. And this is how you have to basically build a cost proposal so that you're giving visibility to the amount of the profit that you're charging the government. Next slide. And we're going to go through these pretty quickly. So basically this is just kind of a summary of what I just told you. Cost element summaries show the total for each cost element, which by cost element we really mean direct cost element. Direct costs are multiplied by the associated indirect rate for the indirect costs, those administrative costs. Labor is often the first cost element shown in a cost proposal, then material cost. And then after all costs are shown, that is when the fee or profit, those two words can be synonymous, although there is slightly different meanings for them in the government world. So total cost plus fee is the total proposed amount or quote unquote price that the government receives on a cost proposal. Next slide. Again, here's examples of labor. This is the type of information that the government wants to see. They want to see all the labor hours and they want to see the labor rates. Those two things, obviously multiplied, give you the labor cost. So this is a very good example of how you can show that in different ways. If you have simple, just a few labor categories, then you're going to show them simply in the first slide. The second slide shows a little bit more categories. And that's the way the government is used to seeing labor. They want to see labor by the category because most labor categories are paid a different rate. And that's what's important. You have to separate your labor by the rates that you pay them. Several companies have one rate for manufacturing, so they will propose it that way. A lot of times the engineers are the ones that have the most differing rates, so you'll see them separately, as you do in the second category of manager, reliability engineer, machinist, electrical assembly. As you can notice, there's all different rates for that. And then again, you're multiplying the rates times the hours to show the dollars. Very common in cost proposals, you will see those costs by year. Next slide. Material costs. Every proposal will have a bill of material, and we call that a BOM, bill of material. And this shows all of the breakdown of the cost of the material that you will have to purchase for that effort. That includes, sorry, I just lost my screen here for a minute. That includes the raw materials that you're purchasing, as well as the outside processing on materials, and you want to show that often by year. Collateral costs such as freight and insurance are sometimes included in the BOM. Finishing, tooling, There's several things. Whatever it takes you to build a product, that has to be shown in a bill of materials on a cost proposal. Next slide, please. Other direct costs. So we mentioned this earlier. Here's an example of a few common other direct costs. Travel is the most widely used ODC cost. Subcontractors can either be considered ODC or they can be proposed separately. Subcontractors in the government world are often anybody who works for you, a supplier you have, that is over the TINA threshold, which is that $750K. Conferences can be other direct cost, outside services, freight. Again, anything can be considered a direct cost as long as that is necessary to fulfill that statement of work that you're getting in your RFP. Next slide. All right, indirect cost support for indirect rates. So again, we'll talk about the indirect rates because getting this concept of direct versus indirect is the biggest hurdle government contractors have to go through. So indirect costs are all the administrative costs incurred for and by the business. Government will pay a portion. Basically, the rate is based on the relationship between your direct cost and the indirect cost that supports it. We call this a causal beneficial rate relationship, meaning the best question you can ask yourself in terms of what pool to put any cost in is who does it benefit? So if you have costs that only benefit your direct labor, those are considered overhead cost. If you have costs that benefit the whole company, such as HR and sales and marketing, trade shows, any of that effort that really is garnishing new business, those would be considered general and administrative. So we have some examples here of overhead costs: repair and maintenance, paid time off, health benefits, depreciation, anything that's needed by those folks that are working on direct direct contracts. And this is an example. So those overhead expenses divided by direct labor equals the overhead rate. All right, next slide, please. Here's an example of how you would show overhead pool cost in a cost proposal. So you would basically show the actual accounts themselves, right? The salaries, the vacation, overtime, pension costs, social cost, rent, insurance, utility, etc. You can show your budgeted cost and your actual cost. In a proposal, the government wants to see previous costs. Oftentimes they're looking for the last 3 years, but showing the last year of actuals is fine. Okay, one more slide, and I think we are done. That's
Great.
it. That was my last slide. Thank you,
Wow.
Ray, and thank you, everybody. And anybody have any questions, please don't hesitate to contact me at my email or my phone number.
Absolutely. Great presentation, Meg, and thanks again for sharing your time and knowledge on this topic. Thanks especially to our attendees. If you have any questions, like Meg says, please directly contact her with the information you see on your screen. Next week, we will be covering Make It Fit, quick proposal editing for page limits. And the full schedule of our webinars can be found on our website under the webinar tab. Thank you, and this concludes our webinar.